What's up, everybody? So in today's video, we're going to talk about NFP week. I know a lot of traders have different views on NFP. Some people say you could completely stay away from it. Some people love the volatility, but I'm going to go over the pros and the cons. And if you do decide to trade during the madness that is NFP, I want to go over a couple things that are super important. And I want to reinforce too, I'm not inspiring people to go out and do some super degen stuff and risk a lot, but I'll be transparent and show you ways that I have seen with my experience that there are sometimes predictable outcomes. First things first, I want to make sure you understand that you can withstand very high slippage, meaning that you might have a stop loss, but let's say if you are in a trade on ES and you have a stop loss of 38.80, you might not get filled anywhere near that, depending on if you're trading directly from the Merc, like CME futures, if you're trading CFDs through different funded accounts or Forex brokers. There's a lot of fucky shit that brokers do and take advantage of these news events. So just be mindful of that, and don't ever put your neck out there, and never, ever risk the same amount you would during any other day. For transparency, I usually don't trade high impact news events unless it is a very wide range of trading. For instance, if I have a large point of interest and then I have a very large stop loss, I know the odds of that getting hit still are high, but my odds of seeing a massive push through my stop loss are lower. Now, if you're trading with 4 or 5 pip stop loss, I can almost guarantee you're going to lose 2 to 3 times what you're risking because of that slippage. So that's something I wanted to get out of the way first. But let's go ahead and hop into the chart, and I'll show you guys an example of what using a certain point of interest can yield you. Now, I'll be transparent. I didn't take this trade yesterday, but I did. This is just me recapping something. I ended up taking a trade after it and getting stopped out on it. And we're going to recap that too. But I like to keep things transparent. Losses happen, but I want, when I learn from things, since I have the channel and since I am doing all this and trying to, put all of the information I can out there, I want to make sure if I learn from a lesson, I want you to learn from it too. So whenever we have a high impact news event, now NFP is, I'd say CPI and NFP are the two highest impact news events, other than, of course, we have interest rates, which are massive, but those are really the kind of the big fuck you events, basically, so to speak, where you're going to see liquidity attacked, most likely on both sides. It's not very easy to just, you don't want to be in trades before it happens, but the number one thing that I would look for first whenever you are anticipating where price might go with a high impact news event is, first off, you want to go ahead and map out your original bias. So in this example, when we're looking at ES coming into, and yesterday we had PMI and JOLTS job openings at 10 a.m. So this candle right here is 9:30. Whenever you have high impact news, I always recommend that if you're trying to trade during that or right after it, you shouldn't be in the trade before the news hits, because oftentimes you're going to get swept in those scenarios. But the first step you want to do is kind of get your overall bias. So if we look right here, we had a very recent large displacement to the downside on ES. So we have this whole leg in price down, and that tells us that we've created a range. You can take your fib tool and draw it, and if you're above the 50%, you're in a premium, meaning that you're in a higher probability sell area. And if you're looking on the 1 hour, you're already in this massive little buy to sell range that price had kind of already traded into. Now, that's a pretty big range. We always want to refine that, but you're able to gather that where we have a more immediate bearish bias. Now, obviously, if you guys trade indices, you guys know what happened yesterday after we had that initial push down, but the overall idea that we had was more bearish because we've had displacement at the downside. The overall high time frame structure is bearish. We have a point of interest that we're trading into in a premium. So you take all these things and you kind of say, what would make me bullish and what makes me bearish. And if you weigh out, a clear, concise bias, that's the first step. Now, if you're ever trying to trade before high impact news, again, I shouldn't say before, I don't want to confuse anybody, because I started off the video by saying this, but I'm not telling you go trade NFP. I'm not saying you should, or that you can predict the future and you go risk the farm on. I'm not telling you that. But as you gain some experience, you will see, and maybe you have seen this already, that oftentimes price does nearly exactly what you think it's going to do. And you kind of sit the sidelines on it. And that's totally fine. That can be your strategy. The title of the video, should you trade NFP? I'm not saying this is how you should trade. I'm saying, I'm giving you the pros and cons. And if you decide to trade it, this is how I look at it. So I just want to be very clear on that, because I know some people joined after I went over the intro. And for those of you who are watching this in the future, you've already seen that. But anyways, we've developed that we have more of an immediate bearish bias using like the 1 hour and the 15-minute. Those are kind of like my intraday time frames I use for general structure. And we always use those in context, the higher time frame. But we see here that price has traded up into this whole buy to sell range. On the 1 hour, it's much larger. We were finding it back down to this candle. You can get a little bit of a smaller range. It's still pretty large range. Now, one thing I want to note is if you're going to trade news, for the love of God, make sure that some liquidity is taken. Because if it's not, you're going to end up liquidity. So just because price traded into this, some people might say, okay, we have a bearish bias. Price is traded into it. We've got my break of structure. I'm going to trade from this fair value gap, or you trade from this one, or maybe you trade from the breaker block right there. Whatever you do, don't do that, because just because we've tapped up into this zone and we have got a lower time frame entry model, if this was a different time of day, this would maybe be a good idea to trade from, because you say, okay, well, we have taken liquidity. We took out all these highs, took out stops there and there. But you got to remember, this news is always going to be that spike. So step one is figure out your bias, and step two is wait for some kind of liquidity to be attacked. So in this example, why did the candle go away? Okay, well, am I crazy or that candle had, hold on one second. I know TradingView's replay fucks up a lot. Watch this works. Yeah, it's so weird. That candle hadn't tapped into it on the replay right there. That was super weird. Anyways, we have the first candle that tapped into it at 9:30. So, if we are bearish and if we are looking to take a sell, we say, okay, well, where is my liquidity going to be? Well, if you're bearish, you ideally don't want to see yourself get above this right here, but definitely not above this, right? So the first thing or if you don't want to stay above it, I should say. So the first thing you want to do is you want to wait for that push right there. So then after you've got that, obviously you've got your confirmation, because you did take liquidity. You've got a nice little 3 drive, and you've got that pretty clear displacement shift and structure. Now, however you frame an entry model, that's going to be up to your strategy. You could use the breaker in this example. That would have been the kind of the first entry. And then let's see how this goes. And this is what we had tried to do in the morning on ES. As you can watch, it goes out and takes that high. So if you try to just use those normal entries and you just try to go right off of, an entry model, so to speak, like you would trade, oftentimes the trades kind of already happen. So one strategy that I like to use, and some of you guys who have watched older ICT will catch this, is a turtle soup. So I talked about this a little bit in the Discord, the stock section, with using this for SMT. So a turtle soup is just putting a limit on the liquidity pool and then targeting the most next recent liquidity. Now, in this example, you didn't get really good risk to reward. So I'm more or less showing you this example so you can understand the concept of it. I'm not saying this was a home run trade or anything of that nature, but if you are trying to trade during a news event and you've established a very strong bias, I recommend the turtle soup method. So turtle soup, it's an ICT method or model from the 2016 core content, where you just set a limit at the liquidity. You don't wait for an entry model, because like we went over, you could wait for the break, or you could have waited for the fair value gap for the order block. You would have gotten filled, but you would have gotten taken out. And that's what happened to me. So that's why I kind of, and I've thought about this before whenever I trade right after high impact news events, because a lot of times the big push, that's the actual liquidity rate. And when I look back, I wished I had gotten long. And we're going to go over that second way to trade it. But if you're trying to trade based off of the news reaction, so to speak, that you want to use a turtle soup and just target the most low-hanging fruit possible. You don't want to go after the entire range, because oftentimes you're going to see a big reversal. Even though we had a more immediate bearish bias because we were sitting in a premium with or inside of a higher time frame order block, and then we raid that liquidity, that could be a very quick in and out trade, and you would just look, where is there going to be stop losses? Well, there's a lot of equal lows right here. Boom, there you go. So that could have been the trade idea number one. Now that's a little bit more complicated, a little more risky, and oftentimes it will be a better risk to reward. In this example, it wasn't because it's massive order block, but you can take the same formula and use it for other situations. And sometimes this order blocks, might be much smaller, so to speak. And usually these are going to be very explosive trades that you're going to be in and out of within 10 minutes most of the time. So that's the more complicated one. Now the other one, which I already have a video kind of on this, is just wait for the big push, like the displacement leg. So the first way we just went over is kind of how to capitalize off the initial reaction. But how to read the bias and get more of the true narrative is wait and see what liquidity is attacked first, and then use your lower time frame entry models. And now this is where you actually go in and use those entry models. I actually made a mistake yesterday, and I'll show you guys the trade, and it was a dumb mistake. I wanted to trade based off of this buy to sell range right there, this whole little range, and take it down lower because I thought we were drawing down to the previous weekly low. I wanted us to see us take those out this week, but I was wrong. And looking back, when I journaled this trade, I looked and said, that was pretty clear. You could have, you were looking for the wrong thing. And I think what it was is I wanted to take this trade, this first trade, but I didn't. So then, I wanted to get a piece of the action, so to speak. But and that caused me to be my perspective to be clouded. So that was a lesson that hit me, and I said, okay, there's two ways to trade news, or that's NFP all falls under the same category. You can trade it off of the reaction, or you can trade it off of once the market shows you its hand, so to speak. But you can't try to force the reaction after you missed it, and that's why I kind of came to the conclusion, and I went and back tested a little bit over the last couple months. I haven't done extensive data, but I did on US 30 and ES. And the turtle soups are 100% the best way to trade news like this. Now, another way you can do it is see if there's SMT, like have all three charts on each screen and see if, let's say if one of the charts makes a higher high and the other two don't, you could take that opportunity, so to speak. But again, kind of recap that, establish your bias, and if you're not convicted, then don't try to trade anything. Look for liquidity inside of a point of interest or front running it. Set a turtle soup limit on that liquidity pool with a stop above the point of interest or below it if you're longing. And then target the most recent lower time frame liquidity. Don't go for the external liquidity, anything like that. So that's a model I'm going to work on, but I did want to share that with you guys. Now the other model where most of you guys are probably somewhat used to this, is you can just wait for that displacement coming up, taking out short-term highs after you've rated that liquidity. So we took out the equal lows. Now you're trading into a discount, right? And you see that whenever we had that big push, this right here, we see a push up, like that initial push. That's not really displacement. We didn't hold that. The displacement was this massive candle down. Now that's going to stop out all of the buyers, and it's going to also induce people to want to sell. So that's kind of like the market showing you its hand, so to speak. It's showing you we're manipulating to the downside. The sell side's getting manipulated. So that's where you want to look to be a buyer. So once you start to see displacement of short-term highs, there's a number of ways you can enter. You can just mark it right here. It's an unpopular opinion. A lot of people don't want to do that. Oftentimes, if you're confident that we have displacement, you're going to get a better entry than others. Now, some people are against that. That's fine. If you don't like doing that, you could just look for a price delivery array in a discount. So for me, that would have been this order block. And again, my perspective was skewed. I wasn't even looking for this yesterday and I missed out on it. But so I don't want to give off the idea that I did this. I've definitely done this a lot of times, as you guys in the Discord know, or a lot of you guys really on live, but I still want to share those mistakes because I think that's important. But we took out that high. You could use the order block. There wasn't a fair value gap. So again, you could have used this breaker block if you wanted to use that. Now, if you wanted, you could have put a stop under the breaker. Now, you would have got a much better risk reward. But for me, I don't really have good track record doing that with indices. That's more something I would use for like a higher time frame as well. This is a 1 minute. So that's entry number one. If you didn't get that, you can always enter off the second displacement. So then you can do the same thing, right? Okay, what's your point of interest? You got to order block off this failed swing. So, failed swing for you guys who aren't aware. If you have something like this, when your bullish or bias is already bullish, oftentimes you're going to create an order block off this failed swing right here. And while it's not a strong low, you can use the lowest low if you'd like, or you can use this, but that can be a trade setup. So false swing, if we look here, we kind of came down, pushed up, didn't make a new low, so that's going to be that failed swing, pushed up, and we left the order block. You can trade off that. That could have been an entry. You could, there's tons of different ways you can get it. That's why I don't want to force one lower time frame entry model over others, because quite frankly, some work better for certain assets, some work better for certain time frames. There's a lot of stuff, and that's why back testing is important. Now, you can wait for the big displacement leg, and this is another strategy I want to back test. But when you see, like, out of all this, this is the clearest displacement right there. So oftentimes people will wait for the discount fair value gap, and a lot of times it doesn't get hit. It's kind of like the breakaway gap theory that ICT talks about in bridge builders. So if the risk to reward's good enough, oftentimes you can just use the closest fair value gap in the big displacement leg. That's one thing I've noticed recently. Now, there are two different ways you can put your stop loss. You could put it under this candle or under this candle. You can put it wherever you want, but usually if it's a big displacement, that's going to leave you with a very wide stop loss. So, target could just be the high of that morning. If you want low-hanging fruit, this wouldn't really be that good of risk reward. Now, had you set it like this or like this, especially, that's a great trade. You don't need to take much more than that. Whenever you're trading the lower time frames with indices or any kind of intraday stuff, it's stop loss placement is really important, because that's what's going to determine, are you trading a 1R trade or a 2R trade? And that may not sound like a big difference, and it should. That's double the money you're making. And you want to really stay above that 2R mark for the most part. So that is pretty much it for how to trade news. I also have another video. I should have linked it in the description. But if you want to watch that, it goes a little more in depth on that second segment we just went over. But the first one is more or less something that I'm kind of discovering after not trading news all the time. So the answer, should you trade news? You really have to ask yourself, first of all, are you able to maintain good risk management by using extremely small positions? Are you aware with how bad slippage is on your broker? There's a couple different things you need to evaluate and be aware of before you just go in and risk 1R on a 5-pip stop loss before NFP. I'm not telling you should do that, because you might lose, you could lose an account, so to speak, if you're close to a drawdown or, your daily drawdown. I mean, if you're trading like gold or something like that, and you see a massive push and you got a really tight stop and you don't get filled for 25, 30 pips, that's, you're fucked. So just keep that in mind and just make that decision for yourself. But if you do decide to trade, I like the turtle soup method. So thanks for the subscription, Ann. So now I want to go over, let's see if there's any questions. Vittorio says, I'm highly interested in scalping crypto. So if you're trying to scalp, I would recommend indices over crypto, because the intraday price action is a lot cleaner. You're able to put yourself in time windows where there's going to be a lot of high volume. For instance, the first 2.5 hours of the stock market, there's going to be a lot of movement. So it's going to be a scalper's paradise. While crypto, I like to rely more on the higher time frame setups. And I'm not going to sit here and tell you can't scalp on it, but I will say that your odds of success are probably lower than something like ES or the Nasdaq or the Dow. That's just my opinion. But if you're looking to scalp, my recommendation would be to use a 15-minute time frame for your swings. So, if you're looking at your 15-minute structure and you have a big push and you've been bullish, you would get your bias from that 15-minute. And then after that, you're going to just treat it like any other time frame. Look premium discount, look for whatever areas you want to trade from. Try to decide in your trade plan if you want to inquire or require liquidity to enter, if you want to require fair value gaps, whatever it is that you build and what you test that works for you. But you want to frame your trades around the 15-minute and then the 5 and 1 minute for your entries. So really, learning to trade is learning to trade. But some people say they want to learn how to position trade or learn how to scalp or day trade. And it really just comes down to, it's like you're learning a language when you learn to trade. You're learning price action. So if you can understand price action, then you apply those same concepts and build your own formula on any time frames. For instance, if you're a long-term trader, you could use a monthly, weekly, daily. If you're a mid-term trader, you want to hold it for weeks to months. You could use a weekly, a daily, and a 4-hour. If you're a swing trader, you could use a 4-hour, 1 hour, 15-minute. If you were more of a day trader, you could use a 1 hour, a 5 minute, and a 1 minute. So, if you're a scalper, again, 15, 5, 1. So you're just going to build your trades really around 3 time frames. I wouldn't go much more than that. Sure, you'll look at a daily chart and you'll look at a weekly to understand where you're at in the much bigger picture. But as far as execution and overall trade planning, I don't think you need to use more than three time frames. You should spend 80% of your time on 3 time frames. So, what's up, Chapo? I see you. MC said a previous weekly high or low is swept early in the week. Do you consider it a valid liquidity pool if it gets tapped again later in the week? No, like if you're asking about ES, like for instance, like this, to me, that's already tapped into, because if we're looking at it from the if we're looking at it from the can't even think of the word. We're looking at it from the perspective that there's stop losses above this, and we see a push up and then a sharp push away, followed by breaks of structure. We can then infer that hey, this is probably these stops have probably been sold, so to speak. So for instance, whenever people are covering on their shorts and they're getting stopped out of shorts, and they're having to buy back that position, the composite operator, smart money, whatever the fuck you want to call it, who we're trying to track, the large investors are then selling at those levels where they're available to, because they're using that available liquidity. So if we see a push up, a push into a liquidity pool and then a sharp push out of it, it's tapped. So I wouldn't pay attention anymore. I just have it marked to kind of keep in my head like, okay, yes, the all the liquidity, all the stop losses above here have been taken out by that push. So I know that's a previous weekly high. It's taken out. But I look at those values as high value areas because, for instance, we see this candle that pushed up. We start to have this order block. I mean, if you look at that order block, like that was a valuable level. So just because this level's gone doesn't mean that you're not going to have any valuable level from that. If you have, the best order blocks, and really the only order blocks I pay attention to are those that either have a massive displacement from them or ones that take liquidity. The greatest ones have both of those characteristics. But, if we look at this kind of came up and took liquidity, so that is a good order block right there. So we know there's institutional involvement there, and we see price trade into it once, rapid push down. Price trade into it again, rapid push down. So, that's a important way to look at things, in my opinion. Niall said, good morning, what's up, Stealthy? Just shorted SPOOs with 0.25 size instead of 25 at the top of the wick. Goofy mistakes. Oh, it happens. Hey, maybe it's a sign. I'm just kidding. I didn't trade today. I had to do some stuff out of the house. It looks like it traded up nicely. I mean, this order block ended up holding value. If we can see what we traded up into this region. Came down and took that. pushed out a pretty massive push right there at the FOMC yesterday. So then I'm trying to frame today's price action around this, if you're wondering why I'm looking at this. So took that liquidity pushing into this massive wick right here. Not the cleanest price action as far as looking to trade off of it, but once we got that shift down this morning pre-market, it's actually a really nice opportunity pre-market. So you really could have just traded off this whole range at that point. Once we had that big up move into the point of interest that causes a displacement down, that can become a sell zone, and then that would have been, that's all she wrote. So immediate displacement down. As soon as we have the open, trades back up into the order block, and then kind of it takes the liquidity. So there's probably a trade right there, but nothing really super valuable in my opinion. The big push was pre-market today. MC asked, are order blocks or breakers created by news boner candles still valid, or are those just one-day manipulation moves? I definitely still look at them. Like, so for instance, let's look at NQ. So if we look back here, I don't know if NQ actually hit it. That would be a bad example. Look at ES. So ES, it's weird that ES took out this high on the continuous contract, but it didn't on ESZ. So look back at ESC, which was the current content at the time, or contract. They even have it. I don't know if they still have it. They don't. Never mind. This high didn't get taken on the contract that had the higher open interest. So it's going to be a skewed example. But if we look at this candle that was formed the day before CPI, if we go to a 4-hour, and we go back to CPI in September, which was, we have this order block right here, these two candles, last up close candles, and I include the wick as well, just because on another time frame, this whole range is the whole buy to sell range that caused the down move. And if we look, price traded up into that. Now it spiked the high here. It didn't do that everywhere else, but you can see that they still hold value, because really we're using order blocks as a footprint for institutional sponsorship. So where better to look for that than news manipulation? So a lot of times those, in my opinion, if they're pro-bias and it supports your overall bias, then those are probably more valuable than regular, in my opinion. So start off, I took a loss on Aussie dollar this week. I wanted to short it off of somewhere right here. Yeah, this right here, got clapped on that. So that, the whole reason for that was that we traded up into this buy to sell range, and I had missed my actual opportunity that I wanted to trade. I wasn't really paying attention because I didn't get to catch the lower time frame entry. So I wanted to see it push back up into this zone and then take it to new lows. And I really probably should have sat it out, because the whole bias originally was wait till we get up in here and use the low time frames to come down and target these lows. But they had already been taken. Now, while the structure overall is bearish still, we have all of this right here, which this big displacement down gives me bearish bias, especially since it's in a daily order block and premium the daily range. So I still thought we could go down lower. So then I set a limit for that failed swing model, but just the bias was wrong and price was rushing up before the PMI. I mean, it didn't. Well, I shouldn't say the bias was wrong. The overall bearish bias, I'm still holding on to that. But you see we took that out with force. So I got stopped out there. That was one trade. Now another trade we took was the euro dollar trade. We got stopped at break even on this morning. Ended up just putting it to break even after that nice push yesterday. So push it back. We ended up getting about 3R on this one. The whole idea of it is we got into a point of interest that I watched for some time. It was optimal trade entry. It was this last down candle before the big up move that caused this break of structure right there. Took out all these highs and gave us a new range to work within. So if you look at the structure, we kind of had gone from here up and followed expectation order flow and created a new range. So, at that point, I wanted to take it to new highs, which was a little bit more of a lower probability we're going to hit the full TP, because we're in that daily and 4-hour order block right here. I refined it, but, we've taken a daily set of highs and a weekly high right there, failed a fair value gap, traded in this order block. So at that point, price, had a reason to turn around. So we set some TPs a little earlier, and that the highest TP was just going to be a runner at that point. But we had these major TPs down here that were hit pretty nicely. So after the price tapped into that 4 hour zone, I just watched for a sweep of liquidity inside the zone. We got that, and it swept the zone. Nice displacement out. Looked for a optimal trade entry and found this order block right here. That was where we entered. Price kind of played around for one day, and then during the Tokyo and London session on Tuesday and Wednesday morning, we saw a nice push up to both our targets. And at that point, we just set the price to, actually the reason I set price to break even was we had a PMI coming up. And, you know, if you're in a trade, that's another thing that I should have touched on. If you're in a trade, or if you're like, you know, if you're in profits or barely in profits on a trade and news about to hit, just break even your stops or close the position. Like if you're right near entry and it's been just sitting there for days, just go ahead and get the fuck out. Like you're probably going to get, you might get lucky, but you know, you don't want to, we don't trade off luck. So, let me see if there's any questions in the Discord. Don't see any so far. Let's see then. Okay, so there, I'm trying to think. My mind's, I'm not going to say the trade we're currently in. I don't want to go and give that out. It's not fair to our members. We'll recap it later on though. I'm trying to think. Oh yeah, we had a link trade. So this hit TP1, and then I gave the option to people to, if they wanted to break even the stops. Wasn't really the highest risk to reward, so I understand if some didn't. But the overall bias, you know, so some got stopped out at break even, some got stopped out for probably a small loss. I'd say like half hour after they trimmed here. It depends on how much you trimmed. It was just around 1 hour, nothing wild there. So I was trading based off of this internal leg of structure right here. Overall, I saw us had this high right here. I didn't see any reason for us to turn around. Yes, we were in a premium, or the price had pushed into a premium, but we have this nice set of liquidity that did end up getting taken right here. And that full TP actually got hit. That's pain. But that was where I wanted us to draw to, was right there. So, and then more likely to draw right here. So whenever I looked at this last internal leg, I said, okay, let's break this out of a 15-minute. You know, I saw this order block right here we had a big push from. You know, we did have this down here. That's where we ended up pushing off of, but I waited for price to trade right here. And then once I got a nice reaction on the 1 minute, I just marketed. Show you what that looked like in the 1 minute. So we came down, sharp push out of it. This is a little, this needs to be like over on this candle. It moves it when you move stuff around. But marketed right around there, somewhere in this region right here, and alerted that to the group, put the TP right here, and then the other one. So we hit the first take profit and then got stopped out before that trade went to full take profit. That's always fun. But, you know, the levels still played out pretty nicely. Now, to be honest, I'm going to delete this now that we've recapped it. But to be honest, this actually doesn't look too bad in terms of maybe catching a sell opportunity. So what I'm seeing is we tapped up into that. You know, we didn't sweep liquidity, so I wouldn't have had a trade, so to speak. Yes, we took these highs, but what I like to see is tap into the zone and another tap and a push. So we didn't get that, but price is still seeming to follow bearish order flow. When I still look at this though, this really is my external structure still. You know, I don't consider this a new swing. So all this is really the same to me. So this is the range that I'm seeing. So like this. So I still think we have a chance to come up and take that high. So at this point, what I'll do is set an alert for that high and, you know, watch. That's kind of my thought process whenever I don't want to chase it. Like I could see a short and then I say, okay, you know, follow your system. Because in all honesty, this could just be coming down a trade into some of this internal liquidity down here. Maybe this fair value gap, we might get a little push lower. Maybe it was this order block, whatever. And then get a nice push, or maybe even this breaker block right here. That might have been it. But, you know, get a nice push back up into the high, and then watch for a reversal there, and then that's going to give us a better opportunity. Now, if I was a day trader that traded Link, I might try to capitalize off of something like this, like watch right here, and say, okay, well, we came into a discount, we came to that breaker, we took out a low, so we got our raid, pushed back out, so now we can watch, where did we come for, what kind of caused that move. Really, we've got this whole zone, so you can go to a 5-minute, start to see we have a nice displacement here, and a push down back in that zone, and you can start to layer that confirmation. You haven't got on the 1 minute. Looks illiquid as fuck, but that's something you guys could maybe watch out for. I might keep an eye on this, but I'm not really super pressed to get into trades considering we have NFP tomorrow morning. Again, if you're gonna be in trades, usually when you're in them beforehand, if they're not gonna be super short term, sometimes you might end up just getting out of them. I'm not saying I'm totally opposed to it. I'll alert in the Discord if I do get active in this. It doesn't look bad. I'm not sure what the RR would be at this point though. So I wouldn't want to put my stop under this personally, just because we do have that unmitigated zone right here. This is just using the whole zone. Not a big fan of. I've got a lot of equal lows. So what I'll actually do is I will set an alert right there, and that's where I'll watch. And if I get a nice reaction there with a little bit better risk reward, I might get into a trade. And that's just using the last little pivot instead of that whole range right there. So it looks like most crypto wants to dump. Yeah, a lot of crypto does, I agree. But I mean, crypto's starting to become more and more decoupled. There's different stuff that I look at, I'm like, that doesn't actually look that bad. Dash is one. I think Dash looks pretty good overall. I mean, it's weird because who the fuck talks about Dash? But the daily structure, to me, we came down and we took out all these lows. I think there was actually some lows, maybe not. That was a different point. We took out a lot of these lows and a sharp push back into the zone. So, when I see that, and then I also see a low resistance run on liquidity up here, that's a pretty solid setup for a power of 3 in my opinion. So we could see distribution up into these highs. They're relatively equal as well. That is another setup I am watching for price to come back down into that daily imbalance. It's also a 4-hour order block. And from here, I want to see the 15-minute get that nice entry model we look for. And, I would really just be targeting this high. Maybe leave a runner. But there's a little insight on the setup I'm watching. Where is my current daily range on AU? So I have this entire bearish downswing right here is the swing range. So I look at it like, it's the structure on the AU has been pretty clean and clear cut. So we have, if we're looking way back here, you have just a series of all these. Here's a low, here's a high. So I wait till we take that low. Here's a low, here's a high, here's a low, here's a high, low, high, low, high, low, and then I'm not gonna really consider this right here just because we just pipped it. So I would just move my low to that, so to speak. I wouldn't create a new range. That would still be the same range. And came up, we just wicked that high, came down and took a low. So to me, I want to see closures and displacement held under these levels before I consider that the new range. But I will still move my high to the highest point. So then we have this, come down again, we have this, and that brings us to where we're at. So this right here, and then if you look, we have this external sell-side liquidity front running the body of this weekly order block right here. Yes, we filled an imbalance, took the this low right here, which on a daily is going to be clearer, but we haven't tapped into the body of that order block. And on the weekly, I like to see bodies get tapped because that's more of the institutional volume when we're looking at that large of a data set. And we've got that sell side right there. Then if we look, we're in a bearish price range. We got a nice 3 drive right into this daily order block. So it came up and took the liquidity from this candle and moved off it pretty aggressively. So still overall bearish on EU until proven otherwise. I actually like this zone if we can get a push off of it. I like that zone a lot. Because we're generating a lot of liquidity coming out of that. All these highs right here. you know, whenever I see that push down, kind of another swing, a big push, like I still want to see this mitigated. I don't want to just try to trade with each swing because a lot of times you're just going to end up getting stopped out on that. But let's see if we have any questions. If not, I'm going to hop off here. I think we covered a good bit today. If you're in the Discord and you posted anything that wasn't in late night Crypto Vibes chat, I haven't seen it, so I'm trying to look around to find it. But I always find stuff like after the stream. I don't see anything though. All right, guys. Well, I really appreciate you guys coming through. Also, if you haven't watched my market maker video, I just uploaded this morning. Definitely go watch that. I know a lot of you that trade ICT or smart money concepts. I think what I used to struggle with and what a lot of people struggle with is the overcomplicated, esoteric nature of this school of thought. And if you're able to simplify stuff, it becomes a lot more executable. So that's exactly what I did in that video. So if you haven't watched that already, definitely go watch that after this or whenever you have some time. And if you guys have any suggestions on videos you want me to make, now that I'm not streaming every single day, 5 days a week, I will be able to put more time into actually creating catered content that is a little bit more directed and efficient, so to speak. So just let me know. As you guys already know, you can get at me on Twitter, comments on YouTube, Instagram, to literally whatever. I always respond. And if you're in the Discord, you guys obviously know that I'm always in there fucking around. So I will see you guys in the Discord. I'll see you on Saturday for the private class. If you want to sign up for that, you can get the link in the description. Use the code all caps Casper and you'll get a free trial. And if you're in the Discord already, I'll see you for our private class as usual. So peace out. See you guys later.